Over the last few weeks, we've had some good conversations with speakers who were going to present at the NACS State of the Industry Summit. Well, the summit happened. I can talk to you about what the numbers are and what they mean. So the State of the Industry Summit just ended yesterday, so I thought I'd give you a little overview of what the numbers, the big numbers, said about the industry, and also talk a little bit about what the speakers said, because it's not just a numbers conference, it's a numbers, and let's look at the trends and the analysis of the numbers, and where is it going. So I'm going to take a couple minutes and walk through both those elements and give you, as quick as I can, an overview about the state of the industry. So first off, we'll talk about the state of the industry overall. We sent out a press release looking at the overall numbers. I want to touch upon a couple of the highlights regarding in-store sales, merchandise, food service, and fuels, and then I'll talk and expenses, and then I'll talk a little bit about some of the things that were said on stage and what you can do about them. So let's just start right off the top with a 23rd straight year, no surprise, in-store sales set a record, $341.2 billion, if you're keeping track at home. Now, that was about a 1.7% increase over last year. So on its surface, that's a good number. However, when you take inflation into account, it's negative. So it's been when we walked into the summit last year, the common phrase was uncertainties everywhere, tariffs, inflation, all of those issues. It affected all the retail. So you can see that a little bit in convenience retailing, where while sales were up, they didn't maintain with inflation. So that's not a good trend for long term, but short term, it's probably fine looking at the overall broader retail landscape. Now, within the top 10 categories, number one was packaged beverages. That was exactly 18.7% of in-store sales. And that's up, that gained share. That's up 0.8 points. So it jumped almost a percent increase in terms of share of in-store sales. So that was good to see. And obviously there's sodas, there's waters, and the leader continues to be energy drinks, which started about 20 years ago or so ago and has really gained traction in our industry. For younger consumers, energy drinks are their coffee. So in terms of categories that saw particularly strong growth, OTP, other tobacco products, not cigarettes, not cigars, but other tobacco products, so that is pouches, etc., that had some really strong sales increases. Also, so did alternative snacks. Alternative snacks is seeds, nuts, those types of things, and that was related to two factors. One is last year at the State of the Industry Summit, a lot of people talked that GLP-1 drugs are changing how people shop. They are looking more for, if you're on GLP-1 drugs, you may skip a meal and instead have a snack. And that snack tends to be a healthier one, or one that is loaded in protein. And certainly the alternative snacks category also includes beef jerky, has lots of protein. And that was one of the messages that we heard from one of the speakers on stage. One of the trends was protein, protein, protein. So that's an overview about in-store categories. And again, very brief, there's going to be a whole lot more that will be communicated in the June issue of NACS Magazine and in the NACS State of the Industry Report of 2025 data, which will also come out in June. Food service is also in-store. Now, that category by itself, if you want to call it a category, is the top category in in-store sales. It's 28.5% of sales. But also, if you split it apart and you look at the subcategories, because food service has prepared food, it has commissary food, and it has three types of beverages: dispensed, hot, and frozen. 4 of those 5 categories I just mentioned would be in the top 10 if they were their own merchandise category. So food service, obviously very significant. And if you look at how it has grown over the last 20 years, it's pretty astonishing. convenience stores really are restaurants that happen to sell merchandise and gas now. 20 years ago, 11.9% of in-store sales was food service. Now it's 28.5%. So it is more than doubled over the last 20 years. And that's of course not inflation related. That is purely percent of in-store sales. A little flat though. And that the growth of food service that we've seen over the last 20 years, roughly a percent increase every year, if you look at the numbers, we didn't see that this year. There was a little bit of recalibrating. And so we'll see how these numbers play out over the next year. One of the things that we talked about last year at the State Industry Summit is QSRs, quick service restaurants, are coming for the convenience business. And perhaps they came for some of it because there are different day parts that convenience stores do very well. Mid-morning, mid-afternoon, late night. Those are areas that QSRs are continuing to focus on. One other thing related to dispensed beverages, dispensed cold beverages. One thing that we heard might be driving the continuing embrace of that category is the whole dirty soda phenomenon, where people are just mixing different sodas and creating their own blends. It's part of the customization that we also heard a lot about on stage. Now, with food service, we also, when we look at the numbers, we look at the top decile, which means top 10% of performers based on profit, and bottom decile, which is the bottom 10% based on profits. There's a 20 times difference in profits when you look at the top decile compared to the bottom decile, and it's related to food service. The better operators do a whole lot more in the way of food service, and that's how they're differentiating themselves from the rest of the competition within our channel and also with other retailers. Now, that doesn't mean that food service is right for everyone, because that's certainly one of the messages that we heard on stage and we've talked about over the years. It has to be right for your customer base, and there's certain areas, certain markets, certain demographics where food service is not going to be the winning strategy. And we also know that when you have food service, you have higher expenses, you have more waste. And what we really heard is it needs to be consistent. It can't be think about the restaurant industry. You go to one place and you have a great meal, and then like a couple weeks later you go back to the same place and the meal's okay. You will be more likely to determine whether you're going to go back based on the lesser of those experiences than the greater of those experiences. So it might just be knocked off your regular routine of where you might go because of the okay experience. Same thing in our industry. If you go from good or great experiences to okay experiences to even poor performances, you're going to find yourself in trouble with customers and getting them to come back. So consistency is critical, and I believe one of the comments from the stage was everyone has a strategy, but how do you do it consistently? That's what determines the winners from the losers in food service. The other thing that we had as part of the standalone event, but related to the State of the Industry Summit, was we had a food safety forum. Very well attended, and we've done this for a few years now. The goal is that food service and food safety are directly related. If you don't have good food safety practices, your food service is in peril. And I think one of the highlights of the 2 days or day and a half was they recorded a new episode of this podcast called Risky or Not. And people talked about what are things that are food safety, risky or not. It was done with a light tone, and you may see that recording wind up on a future episode of Convenience Matters, because very, very well received. In a couple of years ago, we had those guys on the show. Maybe we'll have another one of those, or maybe we'll do some sort of commingling of the two podcasts and see how we can bring them on here on some level. But super well received. And if you just Google Risky or Not podcast, if you can't wait till then. So we talked about in-store, and we talked about the merchandise. We talked about the food service. we also have to talk about fuels. And of course, fuels is about 65% of in-store sales. It's only about 39% of profit dollars because margins tend to be tight. Now, when we did the State of the Industry numbers from 2025, fuel was $3.11 on average for the year. Gas prices were $3.11. Now, right now, they're about $4.09, so they're about $1 higher. So obviously, at this point, revenue dollars related to gas are definitely higher. And margin dollars are probably lower because when prices are elevated, we tend to see a shrinking margins. But what we saw is with fuels, and total fuel sales were down for the year because gas prices were down for the year. Overall, gallons sold, according to our survey, was essentially flat. But overall sales were $476 billion. So combined with in-store sales, overall industry sales were about $820 billion. Put that in context, if we were a country based on those sales, we'd be about number 23 in the world. I think just ahead of Poland or just behind Poland. I'd have to go look at the math on that. But one of the key things that we talked about with fuels is, I love this line, with fuel, everyone's fine. Without it, everyone's exposed. And one of the things that they look at the SOI Summit is they look at cost per transaction inside the store. Last year, when you factor in all those costs per transaction, the typical market basket, cost of goods sold, cost of labor, cost of all those other things, credit card fees that go into serving that customer, the average retailer, setting aside fuel, made 1 cent per transaction. And I know we've talked on the penny podcasts, with the current penny shortage, retailers are tending to round up in favor of the customer. That's 2 cents right there on average. So you can see where that's already putting them negative. But there were some other challenges over the past year. And when you look at without fuel, the average in-store transaction lost 7 cents based on the math that looking at the costs, et cetera, for the average store based on the surveys that were sent in. Obviously, some stores do better, some stores do worse, but that just goes to show you the importance of fueling to our industry. And fueling will be around for a while. That's another message that we heard. About 2% of cars on the road are EVs, so that's an entirely different subject. Fuels propped up a lot of concerns within the industry and made things look pretty good compared to what it would look like without fuels. Finally, want to just briefly mention expenses. Expenses were up, but they were at a slower rate than they have been over the past few years. So that's good news. Inflation's been a little lower. That is as of 2025 when we're looking at those numbers. Credit card fees were up. They hit a record. It's not a record that we like, but they are now $21.3 billion within our industry. So that's a look of the two parts of this podcast. That's a look at overall industry sales, profits, and some of the things that were in the press release, the daily story, that we communicated to members and to the national media. I want to spend a couple minutes, though, in also talking about some of the big takeaways that we heard on stage. This is related to some of the speakers that we had, whether they were talking about industry numbers or talking about other trends, because that's what they do. They look at industry trends and where retail is going. And number one, I already just covered. It's fuel is masking some problems, and that's a good thing. That it's leading to a more positive bottom line, but it's also something that I think retailers need to take a closer look at, is how are their overall options if you set aside fuel, and what do they need to do about that? Because we will have fuel around for decades, but as cars get more fuel efficient, there will be a decline in that. So it's a watch out. It's something to look at. The other thing is consumers are looking for value. And there was the line that you heard over and over and over again, especially in this economy. They are stressed. Consumer sentiment is down. and they're looking for value. But one of the things that we heard is value doesn't necessarily mean low price, because I learned a new economic curve, and it's called the K-shaped curve. So imagine a K, and imagine one part of that K is pointing way up, and the other one is pointing way down. So basically, there was some discussion about how the economy as a whole is there's a K-shaped curve, and what is moving up is one set of income, and going the other way is another set of income. And that's where some of the concerns are in all retail. The rich or the wealthy or the well-off, whatever the phrase you want to use, are doing fine. Their stock portfolios have been going up. They have money to spend, and they are driving some of the economic activity right now. The other one that's pointing down, they are facing challenges. They are looking for the best deal they can get, because they are finding themselves strapped for cash. So with those who are more strapped for cash, they are looking for value defined as price. Those who are a little better off, they're looking for value based on a whole different set of criteria. Of course, price is important, but they're looking for healthy. They're looking for things that make them feel good. So there's not, obviously, there never has been one set of customers, but we're seeing an entirely different, like I said, K-shaped curve. New to me, but it's something to study as you look at your customer base. Third thing is there are a whole bunch of food service opportunities, and there are threats. And one of the phrases that they talked about was leakage. It doesn't relate to putting the wrong things in a bag and stuff like that. What it relates to is when somebody comes to a convenience store, they go to a QSR, quick service restaurant, within 30 minutes. And we have this convenience voices survey mechanism where we ask people on site. And turns out roughly 1/3 of customers in convenience stores go to a QSR within a half hour. And that's because they either didn't find what they like, it was out of stock, the price wasn't right, it didn't look good, whatever the reason is. But that's a real concern when we are selling food service, that people are going to competitors quickly because they don't find what they want. So that is a big watch out, and that's something that the research team has talked about the last 2 summits. And of course, that's a number that we are going to be tracking, food service leakage. Number 4, there was a lot of discussion about finding new opportunities, and there were some categories that we saw some pretty strong growth. It has to be right for you, though, and it has to be legal in your state, or because I'm talking about things like THC beverages. For states that allow that, we are seeing very strong growth in that category, which is, of course, starting from a very low level because they're relatively new. But there's been a lot of strong sales for that, again, related to a lot of GLP-1. People that normally would drink some beers, they find that, okay, let's cut out the carbs. The THC beverages, far less in the way of carbs, and that's becoming a replacement drink for some people. Also strong growth in car wash and in gaming and amusements. And again, that's one of those things that it depends on the state or the local regulations, or just, you basically, how do you want to do business? But strong growth in those categories. So look at some of those new opportunities because there's some promise there. One of the lines that we heard a couple different ways for point number 5 of the 6 points is Annie Gauthier, who is our chair, said, "Be unique and unrepeatable." Now, that's a phrase that we have heard said differently the past couple of years. Henry Armour used to say, you need to be different in a sea of sameness. One of the speakers said, you need to do things differently. So there's a lot of discussion about how do you differentiate yourself from the competition, because thinking about even within our industry, probably 90% of the products that we sell are the same that everybody else says. So store X, store Y, company X, company Y, very, very similar. So how do you differentiate yourself? Is it around food service? Is it around some sort of loyalty program? Is it around customer service? What is your differentiator that makes people go out of their way, go that extra mile or so out of their way past a competitor to you? And more importantly, how can you have something that the competitors can't just like copy and then you're all back in that same sea of sameness? So it's an important point to look at when people are looking for value, whether it's around price or whether it's around how it makes them feel. And finally, point number 6 is, all things considered, the industry still has a very bright future. And you have to end on a positive note, because last year was fairly chaotic, and whether it was tariffs, whether it was all these other things, and we've started the first quarter of this year with the same amount of chaos. Now, oddly, or maybe it's not so odd, uncertainty wasn't really mentioned on stage. And last year, pretty much everybody who got on stage said things like, hey, can somebody check their phone halfway through this, because everything I say may be wrong, because there was so much uncertainty around tariffs and all these other things with a new administration coming in. This year, still a ton of uncertainty. News keeps changing related to fuels, all kinds of other issues, still tariffs. But it seems that there's less of a raised awareness of it, not that people aren't aware of it. And I think there's a couple reasons. One is maybe we're just more used to it because this has been going on for a while. But I think the real reason is our industry tends to pivot, and our industry is good at being nimble. And that's a key criteria as we continue into uncertainty, as we continue into increased competition, as we continue into all these other things that are affecting the business. And of course, one thing I didn't talk about was AI. We'll save that for another day, but AI was, of course, another conversation in there. But AI is a tool and fits into a broader thing around employees or efficiencies or things like that. But again, we'll save that for another day. But there's your wrap-up. There's your wrap-up of the numbers, some of the key things that were said on stage. I wanted to record this the day after got back to make it timely and to give those who were there a chance to share this podcast with a colleague so they get a sense of what they saw. You don't have to do your trip report now. You don't have to write out all those notes. Just send this podcast to them. And if you weren't there, now you can almost feel like you were. And again, to really feel like you were, the June issue of NACS Magazine is dedicated to this SOI Summit and all the details that were there. The State of the Industry report of 2025 data will also be out in June. If you submitted data, it is coming to you free. If you didn't, you can still purchase it, but it is a couple hundred pages of all kinds of data and all those, just an incredible wealth of information. Just leave it that way. So, there's the wrap-up. Hope it was helpful. Thank you for listening to Convenience Matters.
Convenience Matters is brought to you by NACS and produced in partnership with Human Factor. For more information, visit convenience.org.